Wow. Hey, good morning, everybody, and welcome to ShortSalePowerHour.com. My name is Fred Weaver. The guy that was just holding the remote in front of the camera because we couldn't get the camera to turn on is Kevin Kaufman. He is my business partner. We're Group 4610, and you're watching Short Sale Power Hour, which I already said. Wow.
This remote works like 1 out of every 7
That's what you get for $4.99 or whatever it is.
Come on, Kodak. Make a better piece of equipment.
You can buy this crappy remote online right here on our website. In fact, if you didn't know that, you can buy anything from Amazon right here on our website. We've got several of our favorite books and all kinds of stuff on there.
In fact, in a lot of cases, you can get it cheaper than you would normally.
Not even kidding. I personally did my Christmas shopping a couple weeks ago through our website because it was cheaper than normal Amazon.
It's true stuff, so.
I'm not joking about that.
I realize you're not joking because I did the same thing.
So, hey, anyway, I want to cover a topic today that is severely misunderstood in the real estate community and has to do with a piece of information that should be given by realtors to homeowners.
Clients.
Now, let me first say, I'm about to talk about taxes, and neither Kevin or I are tax experts. We are not accountants, we are not CPAs, but what we are is fed up and tired of realtors and the media
giving horrible
advice around taxes and what's real and what's not real. I can't tell you how many homeowners, probably 8 out of every 10
I get a 1099.
Thank you. So let's pick that up. There's the first misunderstanding out there around taxes is that homeowners think that deficiency and 1099 or taxes are the same thing, and they're not. Okay? Well, so in today's episode, we are not going to talk about deficiencies. That's a state-specific thing, and that's the bank having the right or not having the right to pursue the borrower for the difference between what's owed and what they're receiving. That's what a deficiency is. Taxes, on the other hand, is a federal issue, okay? Which is, hey, the bank sold this house or loaned $300,000 on this house. They're taking a short sale for $150,000. There's a $150,000 loss. What do you think the bank's going to do with that loss? They're going to write it off on their books or their accounting spreadsheets. And when they write it off as a bad loss, it then, to balance the book, has to show up on somebody else's little account sheet as income. So bank takes a $150,000 loss, writes it off. Who do you think gets the income, Kevin?
Let me see.
You're right, Kevin. The homeowner gets the income. And it shows up in a little document called a 1099. Now, here's the deal about this little thing here. A lot of people have this understanding, and agents, the reason I'm fired up today about this is because you need to put the right information into your homeowners and make sure they understand this, okay? But a lot of agents and homeowners believe that, well, you just let the home go to foreclosure and then you don't have to worry about the 1099.
I can't tell you how many times I've had that question in the last month where they go, well, but if I foreclose, I don't have to pay on the taxes. Well, hold on a second, dummy. You may or may not have to pay taxes anyways.
Did you say dummy?
I just said dummy.
I agree.
Anybody who says that, I'm calling dummy.
Okay.
Affectionately
named.
Absolutely. Here's the deal. Whether the home goes to foreclosure or there's a short sale involved, there's going to be a 1099 issued. There are way too many real estate agents, and I mean way too many real estate agents, that do not understand the difference between a 1099A and a 1099C and how they correlate to a short sale and a foreclosure.
I know. B is in between.
Exactly.
That's what most agents think when you say 1099A and C. They don't even...
They probably think you have to pay one and not pay the other. Here's the deal. Whether or not you actually have to pay taxes has nothing to do with whether it ended up as a short sale or a foreclosure. It has to do with your situation. Your situation meaning you might qualify for the Mortgage Debt Relief Forgiveness Act, and you may not have to pay taxes regardless if it was a short sale or a foreclosure. Or you may qualify for insolvency and you may not have to pay taxes regardless if it was a foreclosure or a short sale. Or you may not qualify for either and you're going to pay taxes on the amount regardless if it's a foreclosure or a short sale. However, people can't seem to get that clear.
Yep.
And the problem starts with agents because there needs to be more agents who are educated on the topic and are spreading that information with their prospects, their clients, and everybody that they know to get the truth out there.
So here's the deal. We've said a lot. I'm going to give it to you in bullet point form, so you better just go grab a pen. Number one, when the bank forecloses or agrees to a short sale, they're going to write it off on their books as a loss at some point in time. When they write it off as a loss, it equals 1099 income to the homeowner, the borrower. The homeowner's going to get a 1099-A or a 1099-C. One stands for acquisition or abandonment of property, one stands for cancellation of debt. The homeowner is then going to want to take that 1099-A or C to their tax accountant or CPA and say, what effect does this have on me? Okay, as Kevin just defined, there's actually multiple ways that you can avoid paying tax or potentially avoid paying tax on that. One is called the Mortgage Debt Relief Forgiveness Act, and one is called insolvency, also known as Form 982. We're not going to talk in detail about that. You can buy our Crush It package online to hear more. You can come to one of our classes, or you can go do the research yourself. But you need to know what those terms mean, and if you don't, then you need to give yourself homework. And that's the information you need to pass along to your homeowners, right there. Those 5 points.
Not rocket science.
Okay, I'm done.
All right, Friday, January 21st,
Really good.
Scottsdale, Arizona. Short sales uncensored. Friday, January 28th, Crush It short sales, Seattle area, Washington. And Tuesday, March 8th, Northern Virginia, Fredericksburg, Washington, D.C. area. We're coming at you. That's going to be a huge event. Humongous. Be there. Don't miss out. shortsalepowerhour.com/events. All the information you need at the top.
Uno, dos.
Trace.
Short Sale Power Hour. Short Sale Power Hour.
Crush it.
That was the best one this week.
I know. Good job. Tell that.